This morning, we got some details on a US-China trade deal. We also did get a pause on China tariffs, okay, from the 145% levels down to 10%, but the fentanyl tariff is going to stay into effect. Now, the bull market is back, and I will explain why that is in this video. Something that's very bullish is it sounds like the 20% fentanyl tariff is also going to get dropped. It sounds like we're going to end this thing with a 10% China tariff. That is way better than anyone had expected. Keep in mind, the pen is not to the paper yet, so things can change. But I will share with you all of the headlines from Scott Bessent today and from Trump and why this is so bullish. Yes, there's still a 30% tariff on China, but it's going to fall to 10% eventually. That's what Wall Street is starting to price in or expect. Ladies and gentlemen, hit the like button and subscribe to the channel if you have not done so already, and let's get started. First and foremost, here's the deal. The US and China cut tariffs, easing trade tensions. The US and China agreed to sharply reduce tariffs, signaling a shift from conflict to cooperation between the world's top economies. Here we are. Trump's tariffs on Chinese goods drops to 10% from 125%. A separate 20% fentanyl-related tariff stays in place. China cut their retaliatory tariffs to 10% from 125%. The cuts are temporary, lasting 90 days as talks continue. Okay, so effectively, China is still at a 30% tariff. I talked about this over the weekend and last night with a China trade deal or some kind of, pause on tariffs. I didn't think China was going to go for like a 50% tariff rate. Like that would have been ridiculous. I think they would have just probably left. Okay. 30% was like the highest I believed it could go and still be bullish, right? 30% is like, that's not a trade embargo. Like you can still do business with China. It's still not good though, okay? We were right though, okay? It sounds like China is agreeing to crack down on fentanyl and they're going to do away with their 20% tariff, okay? It sounds like the end deal is likely what we discussed yesterday. China opens their markets, other, things related to that, but the tariff rate falls to 10% in the end. That's why I think markets are actually responding so good today. At the time of recording this video, the Nasdaq is up 3.5%, Russell 2000 is up 4%, S&P is up 2.7%, and the Dow is up 2.57%. The VIX is down 13% to 19.04 today. U.S. Treasury Secretary Bessent says China talks in Geneva were respectful. Bessent says we have a mechanism to avoid upward tariff pressure. Bessent says we want a decoupling with China for strategic necessities. Again, I've talked about this, like steel and pharmaceuticals, okay? Basically, if we were to go to war with China one day, we want to be self-sufficient to be able to exist as a nation without China. That's the idea. God forbid that actually happens. That is the idea. China knows this. We know this. I mean, that's the ugly truth with this. Bessent says we are going to protect our steel, semiconductor industries, and select medicines. This is a huge headline, guys. Bessent says he believes China is now serious about halting fentanyl flows into the US. Come on, bull market's back, baby. We are so back. Because what's going to happen over the next 90 days, China is going to go after the fentanyl. Like, China knows where they're producing the fentanyl. Like, they know this, okay? And they're going to go after it. We're going to drop that 20% fentanyl tariff. This is what is super bullish here. Because Trump, again, has said You make progress on fentanyl, you get rid of your fentanyl problem, we get rid of the 20% tariff. Okay? Think about it like this. If we dropped our tariff to the 10% baseline, I don't see in 90 days getting a trade deal with a 20% tariff or 30% or like raising the tariff again. If anything, at this point, a tariff can come off. Probably not the 10%, but the fentanyl one, yeah. So we're back. Bessent says, we'll see what we can do to work on non-tariff barriers. So that can be like currency, manipulation, that can be other factors. Bessent says, we want American businesses to be able to sell into China. This could also be a very, bullish thing nobody's really talking about, okay, is what if China really does open up to American businesses? What if America, starts to get bigger markets in China? Like, for an example, Google has no presence in China. Facebook has no presence in China. There's a lot of American companies that have zero presence in China whatsoever, okay? China's really a closed off market, okay? Besides like Nike and Tesla and Apple and other, specific companies, it's not a huge market for U.S. businesses in China. Bessent was asked if he will meet with China again. He says he imagines we will meet again in the next few weeks. Bessent says, quote, we got a lot done over 2 days. U.S.-China trade deal does not cover de minimis exemptions for e-commerce firms, per Bloomberg. And Grok gives us a little bit of an explanation on this. It says the U.S.-China trade deal ended a rule letting packages under $800 from China enter the U.S. without tariffs. The de minimis exemption helped e-commerce firms like Shein and Temu keep prices low. Now with tariffs starting May 2nd, 2025, consumers may face higher costs for these goods. However, this could protect U.S. businesses from unfair competition and reduce smuggling of illegal items like fentanyl, boosting national security. The change has pros and cons. It may raise prices, but supports fair trade and safety. And White House Press Secretary Leavitt says the U.S. is to continue negotiations with China. Leavitt says unfreezing rare earth was part of U.S.-China discussions. So, gonna unfreeze the rare earth ban on China. Or at least, inevitably, that is the idea. China's rare earth export restrictions continue. Tinian, good luck, I have no idea how to say that. A Weibo account with state ties just said. Donald Trump says drug prices to be cut by 59%, plus gasoline, energy, groceries, and all other costs down. Seems like he's specifically talking to Powell here. Bessent says we will discuss labor and capital with China in further talks. Bessent says we want China to rebalance its economy towards more consumption. Bessent says there is a chance to rebalance together. We'll see if it's possible. Bessent says for the first time the Chinese understood U.S. concerns about fentanyl. But Bessent says we can always go back to April 2nd level for China tariffs, meaning if China does not cooperate, then we can always go back to those really high tariffs. Bessent said Trump viewed 80% as not an embargo for China, but that was an embargo on China. Even 50% is still an embargo on China. Bessent says I could see a Trump-Xi call happening in the coming weeks or months. And look at this one. If China acts, perhaps the fentanyl tariff could come down. We are so back, okay? This thing is going to end with a 10% tariff on China, with a sweet deal for the US and a sweet deal for China. Bull market is back. Bessent says, I hope most trade and tariffs are settled by year end. But again, keep in mind, the only country that really matters to markets is China, okay? Like, that's it. All the other countries are paused. Essentially everywhere on tariffs is paused. It really only matters what happens with China. Bessent says the tax bill is moving better than I could have imagined. And he says that deregulations should start kicking in Q3 and Q4. The Kremlin said today, we are serious about finding ways to achieve a long-term peaceful solution. And the White House said today, Health Secretary will set clear targets for price reductions for U.S. drug prices within 30 days. And we can also see recession odds on betting markets like Kalshi are starting to move lower, now at only 43%, down from 70% at the high. Donald Trump says China will be rewarded on tariffs for fentanyl action. Yeah, we are so back. Obviously, there's not a deal done, but it sounds like a 10% bottom line tariff is the end destination. Trump on fentanyl says there's a big incentive for China to stop. Take China at their word. Trump says opening up China will take a while to paper. So, like, actually getting those details done. And I think that's why that 90-day pause occurred today. Trump says China to suspend non-monetary barriers. Trump says the best part of the deal is China agreeing to open up. Trump says he spoke to Tim Cook this morning. He will build a lot in the U.S. And Trump says, I will speak to China's President Xi at the end of the week. Maybe. Trump says on the China agreement, the agreement doesn't cover tariffs on cars, steel, aluminum, or pharmaceuticals. And Trump says we achieved a total reset with China. Trump says the U.S. is ready to help India and Pakistan with trade. Trade is a big reason they stopped fighting. And Trump praises a full, immediate ceasefire between India and Pakistan. Trump says, I will no longer tolerate profiteering from Big Pharma. And Trump has signed that executive order on drug prices. Trump says the EU was the most difficult on drug subsidies. Now, again, I keep saying the bull market is back. Keep in mind, there's not a deal actually done. But Wall Street prices things in ahead of time. And it sounds like with these comments that we're hearing, the fentanyl tariffs are going to go away. Okay. It's going to take a little bit of time. Okay. We're going to have to see some progress, but inevitably it looks like China's going to have a 10% tariff. The Chinese market's going to open to US businesses, which I mean is going to be massive, especially if the Chinese consumer does start to actually consume. There is a very positive bull case scenario emerging from all of this. Okay. Of, truly American exceptionalism. Okay. I mean, think about it like this. 80% of the economy is services, only 20% is manufacturing. What if the services aspect of this economy continues to grow, but what if manufacturing continues to grow or starts to grow again? I mean, that's a very, positive, bull case for the U.S. economy. Okay. So from that perspective, Wall Street's starting to see through all of these things and, put likelihoods on it. And I think the bottom line is, with this China pause, an inevitable trade deal that looks like it's going to be a lot better than everyone thought, Wall Street has to get reallocated to stocks again. Okay, retail investors, they've been the ones that have been buying the dip. Okay, they're the ones that have been bullish. Hedge funds and institutions, not so much. They've been on the sidelines of this market. They've been under-allocated this market. They've been shorting this market. And now you can't afford to be on the wrong side of this market if you're a hedge fund and institution. I mean, stocks, even from all-time highs, that 611 number, are down 5%. I mean, better late than wrong or better late than never, but you got to get allocated to stocks again, okay, in some capacity or another. And I think that's why this market is back. Now, we're obviously going to be volatile. There's going to be headlines markets don't like over the next 90 days. There's going to be really good headlines over the next 90 days, okay? There's a lot of details that we need, okay? But as I said in the video yesterday, getting this China trade deal, getting this pause, reduces the odds of a recession. It reduces the odds of an inflation problem. It, forces Wall Street to get reallocated to stocks again, okay, among many other positives. We now may start to look ahead towards lower taxes, and the tax bill deregulation, as Scott Bessent said. And maybe, just maybe, a little bit of clarity on what earnings could look like this year. All of which is super positive. Okay. With that backdrop, you have to be allocated to stocks. Now, you can also see today the probability of more Fed rate cuts by the end of this year is rising, okay? At least for 3 cuts. 3 cuts as of Friday by December 10th was 30.8%. That was the chance of 3 cuts. And today, it's 36.8%. So you're up 6% today in terms of those odds. The odds of 2 cuts went from 12% to 20%. The odds of 4 cuts actually fell, which is interesting, from 35.8% to 39.6%. But still, you're sitting somewhere in the neighborhood of 3 to 4 cuts by the end of this year. That is current expectations. But as I explained yesterday, with this China trade deal and CPI and inflation data that we get, if inflation continues to come in good, like it has been, there's virtually been 0 inflation in the last 2 months, that could speed up the timeline for Fed cuts. Okay, Powell is probably more comfortable today with the idea of cutting rates, knowing kind of what a China deal is going to look like, than he was yesterday or last week. Okay, that is really positive for markets as well. The CNN Fear and Greed Index today is coming in at 67, about midpoint of fear. Market momentum still in extreme fear, but you're about to cross your 125-day moving average again. So I imagine this is going to start to go down to maybe fear here pretty soon, probably today. Stock price strength is greed. Stock price breadth, extreme greed. That just means when markets are green, pretty much everything's going up. When markets are red, pretty much everything's going down. That's actually a really good thing. Put and call options, neutral. Market volatility, neutral. Safe haven demand, extreme greed. And junk bond demand in extreme greed as well. Now, what also is bullish is investor sentiment. So investor sentiment has been really bad throughout this entire recovery. Now that you have kind of a outline of what a China deal could look like, you're probably going to see sentiment start to shift a lot. Last Thursday, bearish investors were at 51.5%, neutral investors at 19.0%, and bullish investors at 29.4%. Like, people are still very bearish. And that, my friends, has to change, because you de-risk a lot with this China trade deal. The percent of stocks trading above their 50-day moving average today coming in at 56.2%. So again, not super bullish, not super bearish, kind of in the middle. And Tesla stock at the time of recording this video up 6.5% at $317.60 or so. I do believe Tesla, again, by the end of this week, is probably going to be in the mid 300s. You likely have more of a rally from here, especially if we get above that 100-day moving average at about $325 per share. That's where things could get even more explosive, sending you up to that 360 level, if not that 380 level. That's the next kind of targets that I'm going to be looking at. Now, this China deal is especially positive for Tesla because China's communist. Okay, they could do whatever the hell they want. And, there was always that risk that U.S. companies would just get banned from China. Like, does China really need Tesla in the country? No. Does China really need Apple in the country? No. Does China need Starbucks or Nike in the country? No. Okay, there was always that risk to Tesla from that perspective and other U.S. companies. Okay, that's if things got really bad. Well, they're getting better. And there's less of a risk that Chinese consumers pull back from American companies, okay? And even then, if China is going to, encourage their citizens to consume more, the brands that are already in China are going to benefit the most from that, right? Tesla's going to benefit a lot from that if it does happen. So Specifically, this is really bullish for Tesla. But let me know what you guys think about all of this down below in the comment section. Do you think the bull market is back? Do you think we're going to fall from here? Let me know your thoughts down below in the comment section. Have a great rest of your day, and I will see you in the next one.